I think the first is that obviously the economic situation is going to get worse before it gets better. So 2023 is going to be a tougher year on the macro and macroeconomic indicators. And so, we have been getting our portfolio to brace themselves, try to cut out all the fats, focus on the muscles of the business.
I think we were expecting a lot of sort of larger growth rounds being raised, and I think to a certain degree that's happened.
We'll continue to see interest in Africa. I think specifically in those key markets that you mentioned, but also deepening interest in sort of secondary markets that maybe are underserved. So we're starting to see more deals and interest in markets like Uganda, Rwanda, Tanzania, Cote d'Ivoire, Senegal, etc.
People anticipated the global economic slowdown, but nobody anticipated the extent. And while we all believed that there was going to be more investment in Africa, and especially in African founders, that was actually the case. So while it slowed down a bit, we would see that if you compare it year on year, more money still came into the African ecosystem. The part that got me disappointed is in the unwillingness of African governments to champion innovation through regulation. So we saw so many governments across Africa kick back on innovation generally, whether it be it crypto or fintech, or just making life harder for entrepreneurs trying to solve problems that the government have refused to solve. That was quite disappointing. I would say to an extent, I was quite disappointed in how founders, and this cuts across the world, so it's not just African founders. Founders forgot that they had to focus on the fundamentals of running their business and not just, go on a fundraising spree. And because you want to meet up with that expectation or that valuation, hire 1 million people, open 1 million offices, an exaggeration here. And as such, that in the end has hurt the ecosystem more than it has helped the ecosystem. But again, it takes a village for this to happen. So the blame is not just on the founder, but also on the investors.
I think we were expecting a lot of sort of larger growth rounds being raised, and I think to a certain degree that's happened. I think at least if you looked at 2021 independently, you would assume that the same growth trajectory would continue in 2022, and we did assume that, and the numbers tend to also show that.
For us, one of the things that we had seen in 2022 and 2021 was that with the acceleration in valuations, a lot of opportunities that we're seeing were really priced expensively. So one of the things that we were noting towards the end of 2021 and 2022 was, one, if those levels continue to be maintained, and just looking at the macroeconomic conditions that started to kind of pop up towards the end of last year, trying to understand a bit what does that look like for us moving forward. But I think coming 2022, one of the things that we're quite excited about is the rapid digitization that the pandemic kind of accelerated across the globe, especially in emerging markets. Since because we had to move to do a lot of things remotely, we saw that a lot of digitization had happened. A lot of startups that had started at the beginning of their journey more manually or more high touch, we're more and more moving towards a more digital first approach. And what we loved about that was it started to really push for the use cases for financial inclusion solutions.
slowly people are understanding that fintech maybe should also include what's being called embedded finance, where you're actually having like applied financial services or financial services that are in a real sector, whether that's in FMCG or it's in creative industries or it's in influencer space or whatever it might be, but really finding ways to embed finance into existing supply chains rather than having financial services that might be more direct and more broad-based, but actually having sector-specific financial services solving specific needs for SMEs and for consumers. So I think that is definitely an area where we're continuing to see more action. And I think the other one I hope to see more attention is in agribusiness. I feel like it's a sector where, between impending food crises, food price inflation going up, there's just such an opportunity to say, how can we invest into this sector, which is generally underinvested in, but also where Africa has a competitive advantage in terms of the vast amounts of arable land, in terms of just huge potential on that land, but a lot of work needed to actually say, how can we start exporting food instead of importing it? How can we actually be food self-sufficient as a continent? So I hope we'll see more investment in agri, and not agri-tech, but real agribusiness.
I expected that EdTech we will see, a rise in investment in EdTech in 2022. And unfortunately, that didn't happen. One thing with Africa is interesting. What applies in the West or applies in other parts of the world doesn't necessarily apply on the continent because of cultural nuances, because of education and all those things. But I believe that in 2023, EdTech would see quite a number of investments for various reasons. We are beginning to see there's a talent shortage. And not because we don't have young people, not because we don't have the talent. The issue is that they're not well educated, in quotes, or the quality of education leaves a lot to be desired. Let me not use that word. And people are looking for a lot of senior level talents rather than junior level talents. Recall that this year we've seen a lot of layoffs and it's going to continue. And so people will want more top level talent that will give them the best buck for their money, right? So we're going to see a lot of edtechs focused on upskilling, taking people from just being a junior talent to be a senior level talent through projects, through trainings and all that. So I expect that the edtech space would get quite a number of investments. Healthcare remains a problem on the continent. Now, what vertical of healthcare is the question we begin to ask. Are we talking about people that are building the platforms as a service or digital infrastructure for healthcare? Or are we talking about people that are building our networks of doctors or pharmacists or people that are involved in the supply chain? We don't know. Security is a big deal. African companies generally do not always view security, especially in the banking sector, do not typically view security as a big challenge. But with the way exchanges have been hacked, all the cryptos that have been lost, people that have lost their life savings, and a lot of even people that have been swindled of attacks and all that on banks, we're going to be seeing more investment in that space because everybody now wants to protect the little wealth that they have. We are going to see more investment again in the crypto space. I didn't say blockchain, I said crypto space. Because it solves a fundamental need. Maybe not in the West, but in Africa, it solves a need.
When you look at the sectorial approach, e-commerce, to some extent, has had sort of a good and a sort of a bad rap. We're seeing global players like Amazon coming into the market. We've seen more e-commerce companies coming up, guys specializing in various elements within the e-commerce space. We also see logistics and delivery as an area that is really getting a lot of attention. I think it's connected to e-commerce in some ways. We're in one of the early stage logistics delivery companies in Nigeria called Deliver As Soon As Possible. So we think that there are niche opportunities in that. And whilst logistics and delivery it's a very challenging area. There's a need to be able to find success and find entrepreneurs who can solve that problem, because that becomes sort of the bedrock for a lot of other sectors that ride on it. So it's an area that we think is getting a lot of traction. Health tech is another area that has, courtesy of the pandemic, has suddenly gotten a lot of attention. We're seeing a lot of health tech startups and opportunities. We also see quite a bit of development in the ag tech area, agricultural technology, as well as to some extent ed tech, educational technology.
So we'll continue to see interest in Africa. I think specifically in those key markets that you mentioned, but also deepening interest in sort of secondary markets that maybe are underserved. So we're starting to see more deals and interest in markets like Uganda, Rwanda, Tanzania, Cote d'Ivoire, Senegal, etc. Like, we're starting to see more deals and interest from investors, and even in investors and funds in those markets. So I think secondary markets will start to see more deals coming up. We'll see additional startups moving into those markets from the primary markets as well. So I think that would definitely be a positive, because as much as Africa in general is underinvested in, there are other markets outside of Nigeria, Kenya, South Africa, and Egypt that are deeply underinvested in, and where there's huge entrepreneurial potential. I think that's one. The other one would be that we are going to see more capital coming into the market. As I said, it's still such a small amount of VC that's coming in to the continent. And so, we should be able to grow to the next level. I'm not going to put a number on it. I think until we get a sense of where this year is. So let's say this year is 6.5 billion, let's say. Maybe we'll get to 7 with a few final deals announced in December. I think maybe next year you could get to that next level of scale, but a lot of it depends on the macro and how governments can really navigate and continue to show that they can be investor friendly and that they actually want investment to come in.
A couple of things. I think we always had to see more investors focus on capital efficiency. So I predict that more investors will be working to drive value to existing and new portfolio companies to weather this downturn. So as a fund at ABL, we've always maintained this focus on portfolio management and sustainable growth over the last decade. So we even have an in-house consulting and operation team that work with our new and existing portfolio companies post-investment to address some of their top key needs that the founder is focused on. So in the past, we've done things like help refine pricing models, develop new go-to-market strategies, explore international expansion opportunities. And we expect to see more investors emulating our approach on portfolio support and management for founders, because in this increased focus on capital efficiency and more investors holding on to funding, waiting to see what the fundamentals look like on a macroeconomic level, we definitely think that there's going to be a lot more focus on how can you support your portfolio company to weather this downturn. But I'd say additionally with that, the pandemic has also accelerated digitization and also really caused an increasing need for financial services among those that lost their jobs, those that had to get laid off, those whose jobs have changed because of the pandemic. So there's a lot more people moving into poverty, and more people are unbanked, underbanked, especially in Africa. So we continue to be convinced of that value of Africa FinTech to unlock growth and development for the populations we care about.
I think that 2023, there's going to be such a shortage in IT talent, tech talent. There is a huge demand for CTO level type of talent that the continent hasn't seen in a while. And unfortunately the top talents are being poached by foreign companies. So the Microsofts of this world, the Amazons of this world, and so local companies, and even we know the stories of banks losing whole IT departments in a week. So there's going to be a serious IT talent shortage. How we solve that, I personally do not know how that will be solved. Obviously, real investments into upskilling, into edtech and all that would help shore up that. But it's a demand and supply issue. The supply part has to be worked on. The level of graduates that come out of our schools, the amount of investment into vocational education and coding at the base level, at the young level, well, I wouldn't go into how to solve that, but yeah, IT talent shortage will be a problem. Like I mentioned that there'll be investments in security. I think that a lot of focus on security would come to the fore. People are now going to be very, very security conscious. They're not going to always click on that link. They're always going to find ways to call their bank to say, I got this email, is this from you? Because now everybody's trying to protect their wealth and all that. I think we're going to be seeing a lot of implementation of ERPs. So people building ERPs, say to increase efficiency in business processes. I think we're going to be seeing that implemented across Africa, because now companies are going back to the fundamentals of being operationally efficient, getting the most out of their human resource and any resources available to them. So quite a number of, we're going to see people now beginning to implement ERPs and good business practices, because funding is scarce, the world has slowed down, you want to get the best out of your organization and all that.
I think we're going to come to a period very soon where it's sort of back to fundamentals, and a lot of investors are going to be more demanding in terms of sort of traction and having proven that your business has legs. A lot of the pre-seed, very early stage, idea stage VC funding might go down. You might not get as favorable terms as a founder that you would in 2020 or 2021 and even early 2022. But so, assuming that you're open to those ideas, I don't think that it should be a massive challenge to raise capital. So I think probably, again, with the backdrop of everything that's going on at FTX right now, and we've heard a lot of stories of, startup founders not having the best governance structures put in place, there's going to be a lot of emphasis on governance, having, the right board of advisors, having the right board of directors, making sure that you have experienced people in your team that can actually guide the business, and also a renewed emphasis on transparency. So if you're able to execute on those three very well, I think you have a much better positioning with investors when you want to raise. So those would be my tips. It's sort of governance, set up the right board, have the right sort of advisory board put in place. The transparency is very important. And also just, focus on building a business as opposed to raising. I think very often you can get caught up in this idea that you need to raise in order to run your business when there's so many different avenues to do that. And by the way, about 50 years ago, this didn't exist. So people still built businesses and great businesses, and they did that slow with time. And so when you come back to those fundamentals, you just need to take more time, try and figure out nifty ways of getting access to capital. And I think overall on an ecosystem level, it's actually a good exercise to go through a bad time, because even we as VCs are now looking back with our portfolio companies, working with them, trying to find different avenues of financing, whether that means pulling on your suppliers a little bit more, whether that means, going to banks to secure local currency debt. All of those things come together really well. And I think it's a very, I think it's a really good learning experience for everyone. So in summary, I would say governance, transparency, and also just fundamentals back to basics.